Welcome back. You tune in to News Now on CNBC TV 18. We understand the Finance Minister is addressing the media, so can we cut across? Okay. Okay, in a bit we will cut across. He is speaking, I understand, at the BANCON. You can see visuals at that. So just to apprise you, the most recent comment that the Finance Minister had made was yesterday to investors at the Axis conference. Okay, we can cut across.
CMD Bank of India and the host of this conference, Shri BP Sharma, Executive Director, Bank of India, chairpersons and managing directors of banks, executive directors, whole-time directors and other senior bankers from all over the country. Good morning to all of you. I'm delighted to be here at the inaugural of the IBA's 34th Annual Bankers Conference, BANCON 2013. The theme of this conference is Bank of the Future, gearing up to meet the emerging environment. It's a challenging theme, and I'm delighted to notice that there are 8 sub-themes that will be discussed over the next couple of days. I will have some observations on the 8 sub-themes presently. I want to take the first few minutes talking to you about the economic situation. As all of you are aware, between 2004 and 2011, despite some blips in 1 or 2 of those years, India's economy averaged a growth rate of nearly 8.5%. Since then, thanks to the external environment and thanks to domestic reasons, growth has declined in 8 successive quarters, touching a low of 4.4% in the first quarter of 2013-14. A decline in growth has been accompanied by challenges on the fiscal deficit, on the current account deficit, and an inflation. Government has taken a number of steps to arrest the declining trend and meet the 3 challenges that I mentioned just a while ago. And I want to take this opportunity, as I do take every opportunity, to reiterate my commitment, to reiterate government's commitment that we will do whatever it takes to contain the fiscal deficit in the current fiscal to 4.8% of GDP. It is a red line that we can breach only at our peril. We will not breach that red line, and we will contain the fiscal deficit. The second challenge is the current account deficit. Last year, we had an unprecedented $88 billion of a current account deficit. It was a minor miracle that we were able to finance it fully and even add a small amount to our reserves. But it goes without saying that you cannot finance a current account deficit of the order of 88 billion year after year. So beginning this year, we said that through a number of measures, we will contain the current account deficit to $70 billion or below. I maintained that number for several months, and on November 1, I said, I'm now confident we can contain the current account deficit to $60 billion or below. And 2 days ago, I was very happy to see that the governor said the current account deficit will be contained at $56 billion or below. I can assure you that the governor and the government are not in competition with each other. But in this case, I'm going to try to do better and contain the current account deficit at below $56 billion this year. The third and the most difficult challenge is inflation. In 2009, wholesale price inflation was only 1.9%. Today, wholesale price inflation is over 10%. Wholesale price inflation is over 6% and close to 7%. Retail CPI is over 10%, and of that, food inflation is over 12%, and in some items, food inflation runs at a much higher figure. Inflation in India affects people in different ways. We have retail price inflation, which affects virtually everybody, especially people who have fixed incomes or uncertain incomes. We have wholesale price inflation, which influences a large number of other economic factors in the country, including policy making. And then we have core inflation or manufacturing inflation, which indicates whether manufacturing activity is robust or not. Despite our best efforts, while we were able to contain manufacturing inflation, and in a sense, the sluggishness in manufacturing led to manufacturing inflation being contained rather than any policy instrument. And we were able to contain WPI inflation for most part of this year until the recent spurt. We have not been able to contain CPI-based inflation, mainly because it is driven by food items, especially fruit, vegetables, milk, eggs, meat, and other items. Monetary policy has no impact on food prices. The only way we can contain food inflation is to augment supplies. But supplies are not entirely elastic. Supplies won't rise dramatically in a short period of time. For supplies to rise, you need investment, you need greater production, you need better distribution, you need better logistics, you need better storage, and you need to reach the product to the shelves of stores and shops and malls. So we have a challenge, but we have to take note of the challenge, and we have also to recognize that that challenge brings with it a number of steps that are required, what we would call policy, including monetary policy. But I'm confident that the green shoots that are visible here and there will multiply, and that the economy will revive. There will be an upturn in the second half of this year, and it's quite possible that the estimates made by the Reserve Bank or the Prime Minister's Economic Advisory Council or the government about growth being between 5 and 5.5% will be realized. It would be a pity that a country of our size cannot grow to our potential. It has been repeatedly pointed out that our potential growth rate is over 8%. Given India's savings, which are high, in 2007-8, we touched an all-time high in savings, and since then, and even in the worst year, our savings have been 30% of GDP. Given that savings are well above 30% of GDP, and given the normal incremental capital output ratio, our potential growth rate is well over 8%, and I hope that the measures that we have taken will yield results, and we will get back to the high growth path. Now, in that context, let us look at banking. I was very impressed by some figures put out by McKinsey in its report. This captures in a snapshot the state of banking in the country, the strengths and the weaknesses, and I wish to speak for a few minutes on these. Study has shown that only 21% of women who were surveyed admitted that they had access to banking services. 44% of men admitted they had access to banking services. It means that the majority of the people of India do not have access to banking services. Secondly, given that people live under different circumstances, under different conditions, I think it's fair to say that while a small number has actually entered the 21st century, the bulk of India still remains in conditions of the 20th century, and there is a small number which perhaps continues to live in the 19th century. I do not think there is any country in the world where people span 3 centuries. Banking in India, therefore, has to recognize these hard facts. Banks for whom? Is it for the 1% that McKinsey report classifies as affluent? Is it for the 4% that the McKinsey report classifies as mass affluent? Or is it for the 61% which is classified as mass market, or the 34% which is classified as low income? And if you look at the access of these segments to banking, it's quite obvious that access is denied to those who live in rural areas. Access is restricted to those who live in urban and semi-urban areas. There are still barriers to access even to those who live in metro cities, and it's only a small number which has access to the banking services that we are talking about. I therefore think that the first challenge before the Indian banking industry is to ensure that banking becomes truly universal. Every one of you claims to be doing universal banking. You're not into niche banking. Yes, there are private banks, there are investment banks, there are local area banks, there are banks that serve a small community or a small segment of the customer market. But all of you are universal bankers. But if banking must be truly universal, everyone in India, irrespective of the segment to which he or she belongs, irrespective of where they live, irrespective of the economic conditions, must have access to banking services. So I think in the foreseeable future, our biggest challenge will be how to make banking truly universal, and how to reach the day when every woman and every man in this country, if asked, will say, yes, I have access to banking services. The second point that I wish to make is the quality of our banking, the quality of the products that banks offer. It is true that these segments require different products. All your innovations clearly point in that direction.
Okay, that's the finance minister. Earlier he spoke about on the economy and reiterating what he's been saying. Fiscal deficit is going to stay within 4.8% of the GDP. Current account deficit, he's hoping that it's going to come below that $56 billion mark as well, and things will improve. The GDP or the economy should improve in the second half of this fiscal year. So those were the key takeaways on what the finance minister had to say about the economy. That's all the time we have for this edition of news. Now stay tuned to CNBC TV 18.